All right, we are doing a special live edition today for the market analysis video. And what I'm going to do is just get things set up here. Give me 1 second and close this. All right. So yeah, we're going to run through this just like our usual market video. I didn't advertise that I was doing this live or anything, but if you do have questions, if you are tuning in live here, feel free to drop them in the chat and I can try and get to some live Q&A today. It was a pretty volatile week out there, so let's jump in. I'm just going to kick off with the usual routine, and towards the end we can stick in some of that Q&A. So for anyone that's new to these video series, we do these every week. Every Friday, we do our long form market analysis video, and we sort of break our analysis up into two parts. So in part one, we look at everything that went on this week in market. So we drill down beyond price action. We look at things like correlations and sector performance and market internals and really sort of pick apart everything that stands out, looks different or interesting. And then in part two, we jump into the charts. We look at the longer term trends and try and just help position ourselves and make sense of the action, broadly speaking. So let's jump into some of the headlines from this week. There's a lot to take away. The key, though, was the selling pressure that really intensified this week. And, the major averages are one part of it, because if we look specifically at, say, the growth sector or the high beta stocks, software names, and lots of other little pockets in the market, they were annihilated this week and they've been under pressure for some time. And we really saw that pressure kind of pick up this week, and just more real kind of liquidation type of moves is really how I would frame it out. The price action we're seeing in some of these names is really just get me out at any costs, or, funds unwinding because they need to. So that was really the big story there. We've got the VIX that's over 30. So we've had a huge move in the VIX. It's been, I think, 100% move in the past 2 weeks, basically from the lows to the highs in the VIX. So there's plenty of fear out there. And we are seeing that flight into the bond market for the first time in some time. We're actually seeing bonds kind of perform as a safety haven of sorts. So that is kind of new behavior, but the bond market and interest rates falling, bond market on the rise. So if we take a look here at the numbers, we basically can see it was red across the board. Now, these numbers, again, are masking some of the carnage that is really under the hood. But basically, we had the Dow Jones down less than 1% this week. So, if you were looking surface level here, it doesn't look so bad. You got the S&P, which is down almost 2%. Same thing with the Nasdaq. Russell was down 4.5%. So it's now down basically 12% in a straight line. It's down 11% over the past month. So that's been a tough spot. Take a look at world stocks, though. They held up pretty well. So they were actually almost flat on the week, down just slightly. So international stocks outside of the United States did much better on a relative strength basis. Now, here is the big problem. This is market internals. This is kind of the favorite metric that I like to look at. And you can see here that things have really tipped to the other side. So we don't even have any, marginally positive stocks hitting new 52-week highs versus lows. We are seeing stocks just in aggregate here march lower and deeper into the red. So we saw essentially 800 new 52-week lows in aggregate made this week versus any stocks making highs. That is a very, very poor kind of washout event. And I want to talk a little bit more about that later. And we can see the AD line here, net on the week, was also down 2,800. This does not look right. So I actually don't think this number got updated, this 44.75%, because I don't believe that is correct on the percentage of stocks over 20 SMA. I might be able to pull it up quick, but apologies for that. That number has to be closer to like 10%. So I'll see if I can put a correction in the description later on in this video. But basically here, when we look at the number of stocks, 52-week highs minus lows, and we take a look at this trend over the past 30 days, you can see we have kind of peaked. We went up the mountain, and now we are very quickly coming back down the mountain as fast as we went up. So not a good sign here. This is something on the intermediate term basis now that I very much start to dislike about the tone of what's going on in the market. I like to see, generally speaking, more stocks that are advancing to the upside or breaking out to new 52-week highs to the upside, because that gives me confidence that money is rotating and staying in the market versus leaving the market into, say, the bond market or alternative assets or cash. So this here is certainly something that has me concerned, and sort of a downgraded outlook here looking over the intermediate term horizon. We're going to need to see this stabilize and start to turn around before we can get actually excited about buying breakouts and loading up the portfolio and taking on excess risk, at least sort of the way I view it. Now, again, if we take a look at sector performance here, you can see we had most things in the red this week, so not too much of a surprise. Basically, we had utilities out in front is pretty much the only thing green. Real estate did well this week as well. It was up 0.06%. And consumer staples, so a very defensive tone, plus real estate was essentially what was working this week. On the downside, consumer, discretionary, communication services, financials, all down 3 to 2% on the week. If we take a look at correlations here, I think this slide tells it all as well. If you look across here, you'll see that things are very, very tightly correlated. And this happens when, generally speaking, volatility spikes. Because when volatility spikes, you get asset classes or everything starts to trade basically together. And there's hard to find spots where there's decoupling. And so when we look here at this chart, you can see beautifully, though, the TLT. Look at this negative inverse correlation here. So again, this is speaking to that flight to safety, bond market acting as a bit of a safety haven. As equity markets get pummeled, investors are going to look to sort of shelter down into some of the fixed income markets. But basically everything else, Dow, SPY, Nasdaq, Russell, gold, silver, oil, I mean, everything trading in lockstep together. And for the most part, it was just to the downside. So that's kind of notable here on correlations. If we take a look at volatility, this is also notable. And this gets us into a backwardation, almost a backwardation type event. We might be in backwardation because, again, I pull this data a little bit early. And what backwardation basically means is the slope or the look here of these lines should not, in a healthy market, look like this. You should essentially see this nice sort of price out into the future. You should see this gradual increase where future volatility is more expensive. And what you're noticing now is we actually have near-term volatility, which is basically priced at the same as risk out 3, 6, and a year from now, which basically says that investors are extremely nervous right now. They're buying up protection. Protection is rich, and you're seeing it expressed here in the term structure. If we take a look at interest rates and credit, you can see, again, yields were down across the board. So bond markets were up. Surprisingly, we saw that the investment grade bonds, high yield bonds, they really held in there this week, which was pretty notable. I would have expected some more turmoil there. Again, I mean, we did see, again, interest rates sort of falling down a little bit, but still a little bit of surprise out of what the performance was in some of these funds. If we take a look at the dollar, we can see it was pretty flat this week. So didn't really show up or act too much in our favor or really as a headwind. So you can see the dollar was basically flat this week. We saw essentially everything else was down. So again, gold flat, slightly down, silver down, Bitcoin down, ag was down, crude oil was down 3%. Natural gas was a huge sort of unwind there, down 23%, extremely volatile, down 30% on the month. It is still positive 44% over the past year. So again, you can see just how volatile and how much really natural gas has run up this year and has now started to unwind and give that back. So if we wind down here, we take a look at the report card. There wasn't a whole lot to like this week. So basically we had X's across the board. We had credit market performance, which held in there this week for us. So we give it a check mark. D across the board, though, in terms of report card, which really isn't that surprising, I don't think, given what the market did. If we take a look at our trading systems here, so this is notable, this is interesting because for the first time this year, I think our Merlin trading system here is the least exposed has the most cash on hand it has all year long. So it still has a foot in this market. You can see it's 60% invested, but it's holding on to a 40% cash buffer right now. Basically, that has been kind of ticking up here day after day. It's not putting it back to work either. And that is notable because generally speaking, this year, as soon as it gets cash, it just goes out and finds opportunity and puts it right back into the market. It's not doing that this time. So it is waiting, observing, and recognizing some of the shifts here in the overall market conditions. If we take a look at our short-term system, Lamerick here, about 50% invested. And this one here, again, this trading system, what you have to understand about this is it likes looking for the near-term sort of fear in the market, right? So when things get really beaten up in a short term, it actually likes to go to work. And so I'm sort of surprised it's not more invested right now, but it does have, again, a foot in the door here. And it's got a much different group, a set of stocks than say what Merlin does. This has more financials and more industrials and just a different mix, whereas Merlin is still kind of on more so the tech side or maybe growth side than what this is holding right now. So that's currently how we are invested. That's how we're navigating it. Cash on hand in both in both trading systems, but still participating right now. And there's plenty more on the website. You can learn about these trading systems. You can sign up, get free trials, and get access to our nightly trade reports. So I encourage you to do that if these are interesting to you. So that's it. That's for part one. We're going to move over to part two here. And I see Blaze Hawkins in the chat. How you doing, Blaze? Good to hear from you. I'll probably try and take some Q&A in just a little bit and see if I can pull up some charts. Bear with me for just a second. Okay, here's what I want. All right, so let's go into part two here. And yeah, we're going to look at TC 2000. So we've got our good old fashioned equity market grid here. So always we like to start our analysis. Basically, it's a weekly chart of all of the major averages. We've overlaid our smart trend filter, a custom indicator that measures price and volume across time. And you can see that it is spaced out with these green, yellow, and red dots. And so we're looking at a weekly time frame, and you'll notice here that we didn't produce any new sell signals here on this long-term time frame. And so one of the core themes I think is interesting, especially when markets start to get volatile. We talked about it a little bit last week, but basically, time frame matters, and this is where everybody needs to look at themselves and their goals and their strategy and what they're trying to achieve to kind of figure out what positioning makes sense. When are you going to take action when things start to sell off? Are you trading for the next week hold time, or is it the next year hold time? There's a big difference. And so when we look across our longer term multi-month view, you can see that our smart trend filter is signaling yellow here across all of these major indices. And so it hasn't produced a sell signal yet. It's been uptrend or neutral or sideways. And for really the past 15 months, 16 months in most cases. And so we're testing our sort of general trend indicator here now with most of these markets. And it's certainly going to be an interesting sort of next couple of weeks to see if buyers can once again step up, hold the line, and defend these long-term uptrends. And so the Russell is definitely most at risk of transitioning lower. I would have thought it would have done it this week, but still doesn't have enough evidence there. So basically, we can see that we are still in transition mode. We're back to the lower end of this range, and that's the way things look here on the weekly chart. Now, if we go down to a daily time frame, you can see all of these are in sell signals now. So trend has broken across the daily time frame, the shorter term time frame. Looking back, 2 weeks or so, you can see that we have fresh sell signals across all markets here. So this is clearly a bearish sort of event or development this week in the shorter term time frame. So let's talk about time frames. Let's go to the candlestick analysis here, and let's look at things a little bit closer. So this is kind of the view that we've been looking at. And we spoke last week when we had our last market video, which was the day after Thanksgiving. and on the holiday short market. And we saw that big kind of selling pressure here. We saw this big move lower in the market on that holiday shortened sort of trading day. And that broke through the upper level sort of range that we were sort of looking at, this 40, let's call it 4640 area. And so we broke below that and we danced around it for a day. We popped right back up Monday of this week. Things thought, oh, maybe we can, kind of catch up and start to stabilize here. This would be a perfect spot for buyers to step in. Unfortunately, that did not last. We had a tough session on Tuesday, tough session on Wednesday, gave us a little hope yesterday, and it was a pretty volatile, tough session on Friday. So we got lots of volatility, but basically we worked our way lower. We are definitively below this 4640 area, and we are back to testing the September highs. And so one of the things we talked about, just keeping things very simple, looking at, say, this indicator here, or this, measurement where it's just looking at swing highs and lows. On the way down, now that we had broken below 46.45, we really just wanted to see the S&P 500 now hold and see what it does on this retest of the September breakout. And so here we are. We are, in fact, holding it for now. We are right at this zone, this 45.35 zone. If we go back to this chart here, you can see we closed just above this September high breakout zone. So to me, we're fighting, right? We're fighting. The bulls are stepping in. They're not letting this market totally roll over into the weekend. Notice also the wick here off of the lows into the end of the session. It's not much, but it's a lot better than, cascading below 4,500. There's still some hope out there. There's still some buyers maybe that are coming into this market at these levels. So that to me is encouraging, but again, it's shaky behavior and it's thin ice. If we go to Bollinger Bands, for instance, you can see we've been testing and trying to, potentially even close below that lower Bollinger Band. That's a spot where the markets are definitely stretched. That band is stretched. And, you're seeing some of that significance here. It lines up with, again, these prior highs. There's, I think, the 50-day moving average. I don't really look at that myself in my analysis. Yeah. So here's the 50-day. It's basically closing right at it too. So there's lots of interesting kind of tension in this zone. And I think this is going to be a good battleground spot heading into next week to see if the S&P 500 can hang in there. If we take a look at the Qs, for instance, you can see this had a more difficult day here, as it did break below this 389 area. So this is the area where we, again, wanted to see the Qs hold above, and it did it yesterday, or we rebounded yesterday. And then we put in this bearish engulfing bar today, which again, very much dampened the mood here as we closed below 390, still above the September highs. But generally speaking here, still in sort of a difficult spot. You can see the big volume that has come in on today's session. If we look at Bollinger Bands here, we're closing below the Bollinger Band. So again, the rubber band is stretched. We've moved down to the lower end here, and this is where I think the battleground really starts to kind of set in here, and the fight begins heading into next week. We've also got the Russell 2000, which again is down, let's see, 12% in basically 1 month worth of trading. So this one here, again, is back to the lower end of this Bollinger Band. It's back to the lower end of this range. We looked at this chart here, I think, last time, and you can see just all of these swing points, these prior demand levels where buyers have stepped in at the bottom end of this range in the 215s, 213s, and that's where we are, right? So again, band is stretched, to the downside. So that's the lay of the land here. I think when we look at the Russell 2000, this is a big range, right? And if this turns into a big old topping pattern here, this is going to be one scary topping pattern if this ends up just continuing to crater down here. And I would be surprised if it does it in a straight line, but I wouldn't say it's obviously, I'm not going to say it's not possible. Look at the volume that came in this week for the Russell 2000. And this is the heaviest volume we've seen. This is actually almost eclipsed the highest volume week since March of 2020, which we all know was the big height of COVID when we dealt with it, kind of the first initial time. So this was a tremendous amount of turnover this week for the Russell 2000. Volume typically peaks at turning points. We're coming into multi-month support. We're extended on multiple timeframes here. This is a spot where, again, you'd expect the fight to really kind of break down here and battle it out between buyers stepping in for some value at the lower end of these ranges. So that's the way I'm sort of looking at it. I do want to tie in the VIX here. And so the VIX is interesting because when we look here at the VIX, again, we're getting almost the highest yearly close for the VIX for 2021, and it might not be saying much because 2021 has been a good year, but generally, speaking, the VIX, I mean, we had one flare up here in January where the VIX closed up around 35, and then basically, the rest of this year, all of these spikes have been faded. Well, we're up here in the 30s. We've doubled in terms of price for the VIX over the past 2 weeks worth of trading. And so, when I think about this market in the very, very short term, this is the difficult part, is that you've got a lot of fear out there. We looked at the term structure. You can see that we're almost in backwardation. The VIX has doubled. We're at the lower Bollinger Bands in many of these markets. There's many stocks under the hood that are down 30, 40, 50%. There's lots of current fear out there. And so these tension points can often lead to these springboards. And I don't want to be reckless and think that and suggest that we should all be laying out tons of risk right here. But I do think if you're a short-term active trader, there are those contrarian signs here where we are stretched, where sentiment is in the short term pretty dismal, to say the least. And we've covered a lot of ground to the downside in a short amount of time. So I think there are plenty of reasons why this market could bounce here across, especially these more beaten up areas, and monitoring that bounce, seeing how far it goes, seeing if we can actually hold that bounce. Those would all be the next steps to then, build some confidence in this market. So we're not there yet. We barely saw a little bit of a bounce here into the Friday close. So we're going to need more than that. But there's definitely some tension here, and there's definitely some opportunity if you're short-term active, can manage risk, and are willing to take some contrarian bets that you might be able to get a bounce here into next week. So that's really kind of the big frame out here for markets, I would say. If we take a look at TLT, you can see, again, this is starting to now really act as a bit of a safety haven. And you can see the volume that's coming into TLT. It's starting to break above this long consolidation and essentially move to not quite year-to-date highs, but getting back, actually, yeah, not quite. Let's see. We opened at 156 the beginning of the year. We are almost back to year-to-date highs. Let's take a look here. Yeah. So take a look at this yearly chart in TLT. Let me clean up this line here. So that's what the TLT looks like on the year. So basically we probed all the way down below last year's lows. This doesn't have dividends in it either. It's not a total return index. This is just price itself without dividends. But you can see basically, heavy volume coming in, and we're coming back to the highs of the year. So that is interesting as we start to get a fresh kind of breakout in the bond market. So that, I think, covers lots of what I wanted to talk about. I did have some other interesting stats. So again, looking at the S&P 500, I know a lot of people are looking at this and saying, well, how can this be over? We're only down 5, 6, 7% in some of the major indices. I looked at some studies earlier today, and we've got over 25% of the S&P 500. So over 25%. So what is that? 150, 125 stocks are down more than 20% currently. And so if we take that to the Qs, 50% of the Nasdaq 100 is down more than 20% right now. And if we look at the Russell 2000, over half the stocks are down more than 20% from highs right now. So again, there's lots of damage and pain sort of going on under the hood of some of these indices. So that's it, I think, in terms of market stats I wanted to share. If we look at our last scans here, basically you can see it wasn't much. There wasn't much that was really standing out to the upside. We had utilities, right? So they were kind of standing by themselves. XLU, and then we had, specifically industry on regulated water for utilities doing well. If we look at our list of downside action, there was a lot more, but not a tremendous amount. Only 18 were hitting our scan here that shows more bearish of interest sort of sectors and industries of the market. So we had banks globally here. We had more financial markets closing lows, heavy volume, conglomerates starting to break down here, closing weak, diagnostics, healthcare, food distribution, insurance, right? A couple of different insurance sectors. We got oil and gas pulling back as well, packaging, so even some defense areas of this market. So kind of diverse on some of the sectors and industries that were selling off. Pollution and treatment control, security and protection services, silver, just generally speaking here, basic materials, and then software. Absolutely, was decimated this week. But again, if you're looking at these charts and these trends, you can see that this has covered a lot of ground to the upside and is now selling off here. Specialty retail, you can see seeing a big week down, and then we had some spider sectors in here, so discretionary, financials, and biotech, which were all kind of underperformers this week, generally speaking, or seeing that notable heavy volume and weak closes. So that's it. That's what I have for this week. Let's see. Blaze asked a question earlier. Let's see if I can throw this up on screen. So yesterday's bounce felt like a desperation attack by the bulls, and so I stayed short. And that being said, the indices seem to be holding price support. You see a bounce coming next week. Yeah. So so kudos to you for being on the short side, Blaze. That's pretty awesome to even be able to hedge or to capture some profits on the downside. So yeah, like I said, in the short term, I do see lots of small signs and subtle signs that we could get a bounce here. I do think, generally speaking, we're at that zone, and there seems to be a good amount of fear and washout going on. But with a VIX over 30, it's really hard to know, right? It wouldn't surprise me either way, right? And that's a horrible answer. It's not a reliable answer, but it wouldn't surprise me to see another, 3% down next week or a big bounce as well. I think we're at a tension point where you're going to see, again, volatility in either direction. I don't necessarily think we just go sideways here and start to, grind, going nowhere. I think it's going to be, up or down in a fairly fierce fashion. So that's kind of my thinking here going into next week. So yeah, that is it on the live stream this week. I don't necessarily know that I'm going to do these all the time. I just happened to figure that I would try the live stream here, see if it saves me some upload time and all that instead of recording a video and waiting to upload. And I did open up the markets with IBD live this morning. And so I figured it was, kind of nice to open the markets live on the mic and then close them down here. So that's it. That's all I've got. Hopefully everybody navigated this week okay and survived. I certainly got took my lumps this week as well. So it was a tough week out there. So don't beat yourself up too hard, but try and review the old risk parameters, the risk buckets, get that plan ready for next week, and hopefully we can be back at it and trading well and responsibly next week. So that's it for me. Thanks as always for tuning in. Don't forget to subscribe to our YouTube channel, and also don't forget to check us out on thetraderisk.com. All the content goes there. If you do like the live stream edition, or if you do want to tune in, I did not announce this to anyone or kind of pre-plan it. But if you want to do a Q&A side of things on these videos, let me know. Leave a comment or email in. And that's it. So have a good weekend. We'll see you back here next week.